I shall start stepping through a presentation, and then we'll do a short Q&A session at the end, which will be facilitated by Michael Vaughan from Firemark Partners. So our assets are based in Kalgoorlie, in the heart of the WA goldfields, a premier mining address for gold mining. We have a 2.2 million tonne per annum gold processing plant, which is currently in a nickel configuration that we'll refurbish and build a CIL circuit on the back end of. And then we'll feed our 1.9 million ounce resource base into the plant for a project life of 5 years at an annual run rate of 100,000 ounces per annum. So you can see the two mills there in the photo on the right-hand side, but just talking a few numbers initially, the pre-production capital is $160 million, really good capital intensity of $1,500 an ounce. Payback period is 18 months from commissioning, and these financial metrics are based on $5,500 an ounce. NPV is pretty strong at 8% of $630 million, IR of 83, and cash costs are pretty good as well, $28.50 an ounce, and all-in sustaining sitting at $33.50 an ounce. So we've just come out of a hole this morning and it raised $175 million. So what this does is fully funds the construction of the plant, all the mines, all the infrastructure we need to get to first gold production in the middle of 2027. And we also have a share purchase plan for current shareholders that can also enter into the placement at the same price as other people. So looking at us, snapshot, this is our share price close as of Monday prior to going into the hole. The capital structure following our recent consolidation is very tight at 200 million shares on issue, market cap of around 255, and net our cash and no debt gives us an enterprise value of $216 million, which is very well undervalued for a developer and a near-term gold producer. So the board and the management team, I'm not going to speak through everyone on the screen, but we do have around 180 years of experience working and living in the eastern goldfields of WA. We've ran mines, we've built mines, we've even closed mines, we've had good discovery success, and we've got some good corporate finance and strategic thinkers in the group as well. So we believe we've got the team that can deliver on our growth plans going forward. Just looking at the map on the right-hand side, you can see Kalgoorlie is centred there, and our assets sort of surround Kalgoorlie. They're shown in red, the tenure, and then you can see some of the resource text bubbles coming out. So probably our two key projects we want to talk about initially is our Barara project, which is 400,000 ounces, and the Burbanks project, which is 466,000 ounces. So these two projects make up nearly half of our resource book and will underpin the feed to our Black Swan plant. You can see our Black Swan processing facility is 40 kilometres to the north of Kalgoorlie, and another project which doesn't have any value in our portfolio, or particularly our market cap, is our Nimbus silver zinc project. So it has 20 million ounces of silver and 104,000 tonnes of zinc. So we're currently reviewing what we do with that project going forward to actually get some value into the portfolio from that asset. So quickly on where we're at. From a production perspective, now we are fully funded and we have delivered study. We're getting straight into production readiness and de-risking our projects. We'll start refurbishment in the middle of this year, and we'll commence mining in late 2026 to get first gold by the middle of 2027. We're currently doing some large exploration programs in the next few months. I'll kick off currently drilling a 30,000 metre program out of Burbanks asset. So we'll continue to grow our resource base. As you'll see when we go through the feed sources through to the plant, only less than 30% of our resource base is actually in our plan. So we see enormous upside to increase our conversion organically and increase the mine life beyond our initial 5 years. And with the studies, we've quickly moved to feed studies. So we have GR engineering commenced the feed studies in December, and they'll deliver those late this quarter or early in the June quarter. And along with that will come EPC documents that we can then award for construction and get onto construction. As we go through and before our gold production commences in the middle of next year, we'll continue through the drill bit to upgrade our studies to at least a PFS level and bring more quality assets into that mine plan. So looking at the study outcomes, the study price used was $5,500 an ounce Australian. So EBITDA's very strong, $1.2 billion, free cash just under $1 billion, and a prices closer to spot around $7,000 an ounce. EBITDA sells to $2 billion, free cash to $1.7 billion, and a very strong NPV of $1.2 billion. On the graph, you can see the ramp up in the ounce profile. So we're aiming to commission around May, June next year. And then our first year of production in 2028 will be 80,000 ounces, ramping up to 90 in year two, and then hit steady state production at around 110 to 115,000 ounces thereafter. And you can see the cash burn on the line graph there. So starting cash of 60 million, and clearly this is pre-raise. Cash burn of around $190 million. So a lot of that capital is obviously going into the processing plant, $100 million, $45 million for infrastructure, and another $31 million to start the mines. And then from year one, basically we are cash flow positive, and then work our way up to that $1 billion of free cash flow. Just focusing on the graph, this is sort of a risk type graph as far as our resource base is concerned. So in the red bars, you can see the proportion of measured and indicated resources in our mine plan, which averaged 74% over 5 years. And in the yellow bars, you can see the inferred material, which makes up 26% of the resource base through the plant. You see our Barara project in the photo there. So we ceased mining this project in December, and we have 480,000 tonnes of stockpiles, 330,000 of which we aim to put through Black Swan. So it greatly de-risks the project that we have so much ore on stockpiles at the moment. So if there is any ramp up issues with mines, we already have plenty of feed to put through the Black Swan plant. Now looking at the Black Swan processing plant itself, it's on grid power. We are under what's called the ELP scheme in the Goldfields distribution network of power, which we do get curtailed, particularly during the hot summer months. So what we plan to do is have a diesel backup power on site, which we're working towards, and also a mine camp. But what we do already have on site is obviously this great infrastructure you can see in front of you. So at the bottom of the photo is the crushing circuit working through the conveyor belts at iron ore bins, and then towards the right-hand side, you can sort of see the two mills there. So essentially, we're just going to refurbish this part of the plant. Towards the top of the photo is the flotation circuit and the large drying shed towards the top of the infrastructure you can see there. We're going to leave that intact for optionality for the nickel that we have in the ground, 220,000 tonnes of nickel at Black Swan, and also the optionality to treat our Nimbus Silver Zinc project, which is also amenable for flotation. And we'll build the CIL circuit right at the top of the photo there on the end of the plant. We also have tails deposition is in good shape. We have 15 months on the current lift before we need to do the next lift, which is already partially built, and the next 2 lifts are already approved. So we have 4 years of tailings deposition, and we also have our water bores that we can re-equip and also extend. So the infrastructure and the approvals are in pretty good shape for this project. One of the benefits of acquiring a brownfields project. And just simply looking through the icons, simply going to refurbish the front end of the plant, build a gold circuit on the back end of the plant, and keep the flotation circuit intact for great optionality going forward. So it is the Black Swan processing hub. It is a hub and spoke method, which is pretty typical across Australia, and particularly the eastern goldfields of Australia, where you have a centralised processing facility and your ore sources are trucked in via road trains to that plant. You can see in the table on the left-hand side that are two cornerstone assets, Burbanks and Barara, feature prominently. Obviously, they're a large part of our resource base and obviously our feed going forward. And basically, the tonnages are ranked from highest tonnages through the lowest. And you see there's also some higher grade undergrounds that will spice up that grade, averaging around 1.63 for the 5-year life of mine plan. Typically, we'll need to mine 3 to 4 assets a year to deliver that 2.2 million tonne per annum run rate. Just quickly on the time frame, really just want to reinforce the construction time frame. So commencing construction mid this year, commissioning sort of late financial year 27, and being gold production in mid 2027. Looking at some upside, this is our Burbanks project. We're currently drilling a 15,000 metre infill program that will commence in July last year. We'll complete that in March this year, so this current quarter. And then we'll update our resource in the June quarter and then run PFS studies from both an open pit and an underground perspective thereafter. And then in a few months' time, we'll also commence an extensional program, which is another 15,000 metres to extend this high-grade resource. So you can see on the left-hand side there, this deposit's been mined from the early 1900s. Over 320,000 ounces extracted at very, very high grades, double-digit grades. And you can also see some of our recent results there, 0.96 is 1,700 grams a tonne, and within that, there was 0.3 at 5,800 grams a tonne. So very high grade. So this asset is narrow, but it's certainly high grade and will provide some feed going forward for our Black Swan plant. Some early stage opportunities from an exploration point of view is the ground in and around Black Swan. There's been some good work done with some soil anomalies. The northern anomaly is the most exciting for us. It hosts our Wilson's prospect. It's had 6 grams a tonne hits within 200 metres of the Black Swan processing plant. So we're quietly excited about this. There's outcrops on the surface, geologically not very well known. So we're aiming to do a small 2,000 metre air core program in the next few months out of Wilson's, understand what's happening below the ground, and then do a much larger RC program thereafter. So very early stage, but we're very excited about this, about the prospect of finding a brand new resource right next door to our brand new plant. A little bit on regional consolidation. There is lots of opportunities to consolidate in the eastern goldfields of WA, even though it is a mature gold belt. Our land package is the 3rd largest in the region, just behind Orabanda, and also Northern Star Resources. So there's lots of opportunities to grow our asset base and extend our life of mine plan, both organically and externally as well through M&A. And just to sum up quickly, we have a strong resource base, 1.9 million ounces of resources in the ground. We're fully funded through to first gold production in the middle of next year. We have a very experienced and accomplished team that can deliver this strategy, and we look forward to generating more value for our shareholders going forward. I might now hand over to Michael and see if there's any questions that have come through, Michael.
Thank you, Grant. Yes, we've had 5 key topics covered today, so we'll run through about 5 questions now. Firstly, there was a couple of questions about the capital raising strategy to fund the refurbishment of Black Swan and getting the operation up and running. Could you please give us some insight into what Board was thinking with the approach that we've done to funding the project?
Yeah, look, there's always a number of approaches that you can look at when you're looking at funding through the funding stack. You know, the typical debt and equity and hybrids and those sorts of things. But I think for us, you know, we had concerns about releasing a solid study, and then there'd be issues about us being co-issue. So what we wanted to do was be fully funded, and through a debt process, you know, you can have a few hooks in that. You can have issues with some heavy debt covenants. They may force you to hedge and be locked into prices, which in a rising gold price environment might not be so favourable for us. So I think the key things was speed. You know, we could do this funding very quickly, and I think it's just given us the opportunity to get the money in the bank, de-risk the project totally, and know that we can move forward and execute our plan.
Thanks, Grant. Just staying on the theme of capital and capital management, we did have a question about a timeline as to when you think Horizon could be in a position to pay a dividend to shareholders.
Yeah, look, I think a lot of the gold producers are paying dividends, and I think where we're at the moment, look, we haven't over raised, so to speak. So I think we've got the money we need to deliver and have some contingency and buffer in that. So we shouldn't need to come back to the market. But we do need to manage our capital very prudently. You know, that $175 million, we've got 101 million going towards the plant refurbishment and construction. As I said, we've got 45 million to go towards infrastructure, so we need to expand our ROM pad, build the foundations of the camp and that power station. There's a lot of infrastructure works we need to do as far as upgrading roads, particularly from the mines, accessing public roads and those sorts of things. And we have around sort of $30 million allocated to get the mines into production and operational readiness. So I think there's already a fair bit of capital going into the place. And then as we move through operations and start generating cash, I think we just need to be prudent with our cash flows coming in and tight capital management. And then I think there will be a stage where we're generating sufficient cash flows and probably in a couple of years post-production that we can actually certainly look at a dividend and reward our shareholders.
Thanks, Grant. We had another shareholder note that you hold around 1 million ounces or above that in gold resources in the region, which haven't been included in the studies released this week. Have you done any work on those deposits outside of the study, and could any of that potentially come into the mine plan?
Yeah, that's a good question. I think I alluded to in the presentation that, yeah, they're right. There's only about sort of under 30% of our resource base is converted through into the production plan. So a lot of that is the confidence around the resources. So we're have confidence in our resource base. But I think, for example, our Burbanks asset, we've only included the open pits in our mine plan at this stage. With the underground, we see it providing a good source of feed for the plant, but only 10% of that resource is indicated. 90% is in the inferred category, which is the less confidence category. And when you're dealing with very narrow ore bodies and very high grades, we didn't want to put something into the market that we were confident that we could deliver on. So with our infill drilling program now, we'll get a lot more density into that asset. And we're looking forward to, once that resource is actually done, we can move into PFS studies. So I think there's no Burbanks underground in that plan. That will certainly come in. I think there's great potential at our Coot and Crate project, which is only about 12 kilometres sort of to the northwest of Kalgoorlie. It's only got 139,000 ounces there. It's a nice big juicy pink porphyry system, 35 metres wide. It's got about 30 metres of cover, but once you're down to the ore, it's very wide across the benches of the pits and exploration potential. It's still open at depth and also open to the north. We're a little tenement constrained, but certainly open to the north. And I wouldn't have thought that 250, 300,000 ounces could be around our Coot and Crate projects. And I suppose there's smaller greenfields upside as well. Like a lot of our ground hasn't been heavily drilled at depth. To the north of Coot and Crate, we have our Honeyeater and Kestrel projects, which has great grades that we need to follow up on. We've got a recent Gordon's Dam acquisition, only 12 kilometres from the plant. There's about 5 or 6 walk-up targets our geo's really excited about that we want to get to drill at. So yeah, look, we've got a fantastic package, and our aim is to grow the package and back our land position, which we're going to do.
Thanks, Grant. Another question now about another asset in your inventory, that being Nimbus. We've had a shareholder ask about the 20 million ounces of silver you've got there and how that could potentially be processed through Black Swan. I know you touched on it in the presentation, but maybe you could expand a bit more on Nimbus.
Yeah. Look, it is a very large resource base, 20 million ounces, 104,000 tonnes of zinc, and it also has about 78,000 ounces of gold within that mineralised package as well. There's a high-grade core of 6.4 million ounces, and that's got very, very high grades, like 770 grams a tonne silver, just under 13% zinc. And yeah, that's based on 2 or 3 lodes that are very high grade. And our initial thoughts were we'd do an underground development off the base of the pit, but with silver prices firming, we're looking at open pit optimisations at the moment, and early work on that is looking really promising. And as far as processing through Black Swan, we do have great optionality through that plant. So it is amenable to flotation. Previously, back in the mid-2000s, there was a plant there that produced silver doré bars, but there is some heavy metals within this as well. So there's arsenic, lead, and particularly mercury, and mercury was quite an issue back in the day, and the site is classified as contaminated, remediation required. So we've remediated the site in 2022 and are getting it reclassified. So our process is not to produce silver Doro bars and have a mercury issue. We plan to put it in a con. So we may, by putting it through Black Swan, move some of those heavy metals out to site. We need to consider, environmentally, is that the best thing to do, or do we build a small plant at Nimbus and develop the project that way and keep all that heavy metals in the one position. And that's if we develop it ourselves. Like we've got great optionality. The other things we can look at strategically is do you put it in a shell, or do you IPO it out and Horizon have a large stake in that company and maybe an in-specie distribution to Horizon shareholders. So it's pretty much front of mind at the moment, Nimbus, as far as our strategic plans are concerned. So we're still very much goal focused, but Nimbus hasn't gone away, and we're going to put some work into that one.
Thanks, Grant. Final question. With the dearth of gold processing facility capacity in the goldfields at the moment, Black Swan's going to be a strategic regional asset once it's refurbished and up and running. Can you talk to us about how you're thinking about regional consolidation opportunities and the potential to treat other deposits through Black Swan?
Yeah, that's a really good question. Obviously, in a very strong gold price environment, there's every person wants to treat their ore. So there's probably about 8 processing facilities that are running at the moment in the eastern goldfields at WA, and they're all full. And to give you an example, our 230,000 tonnes that we did at Phillips Mine, like we had to put that through 3 processing plants because we just couldn't get it all through one plant. So we had to break up the package and get different smaller toll treatment agreements. So our Black Swan processing hub is actually going to unlock more infrastructure in the region as far as toll capacity is concerned. So I think I've talked about it before. There's apart from growing our own assets that we've talked about, and we've already got 5 years filling our mill, we're certainly open to other opportunities, whether it be M&A and acquiring other assets to either bring forward higher grade into our 5-year plan or extend our 5-year plan. And there's also those opportunities for other players that have development ready assets that we might be able to JV with, or we might be able to toll treat their ore. So yeah, there's lots of opportunities for consolidation and expansion.
Thanks, Grant. I think we can conclude the webinar.
All right, thanks, Michael, and for everyone out there, thank you for your time, and look forward to giving you further updates in the future.